Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Bloomberg Daybreak Asia podcast. I'm Dan Schwartzman. Doug Krisner is off this week. Coming up, the latest developments from the Shanghai Cooperation Summit in Tianjin, China. But we begin with the markets. On Tuesday, we'll get the first U.S. trading session of September, which is usually the weakest month for stocks. For more, we hear from Michael Hartnett, Chief Investment Strategist at BofA Global Research. He spoke with Bloomberg Television host Shery and Avril on the Asia trade.
Really good to have you with us. Should we get started with what to expect out of the U.S.? Because, we are headed towards the reopen after the holidays, but valuations have been pretty high. Is this a concern?
Yes, it is a concern. It's one of the few concerns, however. I think people are very happy that we've seen a turn in tariffs lower, we're seeing a turn in rates lower, we're seeing taxation lower. And of course, you've got an incentive now for both the administration to be joined by the Fed in creating good economic conditions in front of the midterms next year. So I think there's still a fair bit of momentum behind the US market. I think the difference in 2025 is that there are other stories around the world. Japan's one of them, China's another one of them. So it's not just a US exclusive bull story, but I think the story in the US is still fairly intact. But you're very right. The valuations are the one thing that longer term investors are looking at in the US and saying, can I really get the upside from the US that I could get perhaps out of China or Japan going forward in the next 12 months?
Does that also apply to the currency space as well? We have seen the dollar now lose ground for the last 5 sessions.
Yeah, look, the dollar's in a bear market. The dollar's down 10% year to date. There are good reasons for that. The bear market will continue. Interest rates are going to come down in the US. You've still got a lot of debt, a lot of deficits you've got to finance. You've got a very radical president pursuing quite radical, unconventional, policies. Some are good, some are bad, but foreign investors have a little worry about that. And I think that bear market will continue. That's why gold's at an all-time high. That's why silver's at an all-time high. A normal US dollar bear market is down 30-40%. Thus far, we're down 10%, and you've still got further to go with the dollar going down. And of course, that's one of the reasons why in 2025, international markets have outperformed the US.
You're positive on Japan as well. What, in terms of stocks, do you like there? What are you perhaps steering clear of?
Well, I think there's interest in Japan. I'm here at the Bank of America, Tokyo conference, the Japan conference. I think we've got 600 plus global investors here. I think 80% of them are from overseas. I think the number's up 20-25%, from last year. Why are they coming to Japan? Well, A, they're looking for an alternative from the US. B, the currency is cheap. But I think there are Japanese narratives. One is, the content, companies. Another is the defense industry, which is starting to grow because of, US isolationism. And of course, you've got a banking industry in Japan, which, suddenly is doing well, and even though the Japanese banks are up, 200, 300, 400% from their lows 3-4 years ago, they're still, believe it or not, 70% below where they were in the late 80s. And so long as the Bank of Japan is behind the curve, which it is, and so long as the Bank of Japan is going to be forced to raise interest rates, which it will, those bank stocks will do well. So I think banks, content, defense are probably the 3 big narratives in the Japanese market right now.
What about chips and techs in Japan?
The tech companies in Japan, again, I think that the tech companies globally will continue to do fairly well. I think the big focus right now, however, is China. I think in China, this is the market, the bull market that nobody speaks of. And it's very, arguably what we've learned, this year in 2025, or global investors have learned this year in 2025, driven by that deep-seek moment that we had earlier on in this year, is that you cannot be exclusively in US tech. You need to barbell that. most particularly with Chinese tech companies. But in addition, I think there are Japanese tech companies that can also benefit from that globalization, if you like, of the tech exposure that investors feel that they need right now.
And Michael, China is also a geopolitical story, right? I mean, with the realignment of alliances and partnerships,
yeah.
Of course, you have a war going on in Ukraine. How big will the defense sector be? I mean, overnight, we saw European defense shares rallying on ideas that potentially we could see really a detailed plan on rearmament. Right now, just a headline on the Bloomberg right now that South Korea is also going to gradually raise defense costs. It seems to be a very global story at the moment.
Absolutely, yeah. I mean, look, I think that, for 20, 30 years, I mean, America has really policed the world in exchange, if you like, for savings around the world coming back to America and buying treasuries and financing the deficit. And I think, the Trump administration, has really been, fairly honest, I think, in saying to the rest of the world, we're no longer going to finance your security. We're no longer going to make you, be your defense industry. You have to stand up on your own 2 feet. And I think we saw that first in Europe. But I think now Asia is the next leg of that defense trade. And as I said earlier, the defense stocks in Japan are doing well. You yourself said that Korea, China are sort of joining that theme. But it is now a multi-year theme. America has debt problems. It has deficit problems. It said we can no longer use American taxpayer money to defend your countries. You have to defend them yourselves. And that is going to mean that there's going to be greater spending on defense across a greater range of companies, to the benefit of those companies within the local stock markets.
Michael, you alluded to some of this earlier, how when it comes to U.S. exceptionalism, we've seen a bit of it creep back in stocks, AI, a key play. Maybe you talk about the valuation risk there.
Yeah.
Bonds have also creeped back in, but dollar, I think that's still the missing piece of the puzzle. And, you're still bearish on the view even into the end of the year. What are you expecting into next year as well?
Well, again, I think the dollar's in a bear market. And again, if the dollar was as exceptional as, everyone thought it was a year ago, the dollar wouldn't be going down. The dollar is going down because the US is less exceptional. It's got less exceptional outperformance, and it's got a less exceptional narrative. And again, that's partly because the rest of the world has reasons to invest there. Europe, defense. Europe, fiscal stimulus. China, rebalancing. A weak yen. A weak dollar, which is great for emerging markets. So 25 is very different in that suddenly an equity investor has other places to invest in. It's not just exclusively the NASDAQ. And so that's why I think that the US has lost a little bit of its luster in terms of the exceptionalism story. Of course, it's still got AI. It's still got, a business sector that wants to make money, blah, blah, blah. But I think the dollar is something that will be sacrificed, if you like, by the Trump administration. If you want to make America great again and you want to rebalance the US economy and you want to get manufacturing going in the crucially electorally important states of Pennsylvania, Michigan, and Wisconsin, you really don't want a strong dollar. So I think the dollar is in a bear market. It's just beginning. It will continue. But as I said, if you look at gold, you look at silver, they're telling you that they're very much in the early stages of that dollar bear market.
Yeah, and all this as part of, as you highlighted there, investors looking for alternatives other than the U.S., searching perhaps in Japan. Michael, really good to get your insights on all this. Michael Hartnett is Chief Investment Strategist at BofA.
Welcome back to the Daybreak Asia podcast. I'm Dan Schwartzman in for Doug Krisner this morning. Chinese President Xi Jinping is pledging over $1.5 billion in grants and loans to member states of the Shanghai Cooperation Organization. Attendees at this year's summit include Russian President Vladimir Putin and Indian President Narendra Modi. Speaking in Tianjin, Xi called for the creation of a development bank, more joint green energy projects, and expanded education programs. We got reaction from Henry Wang, founder and president of the Center for China and Globalization. He spoke with Bloomberg's Shery and Avril on the Asia trade.
Very good to see you, sir. Let's start off with your key takeaways from the SCO. I think one of the meaningful developments includes grants, investments, loans that China is pledging. How significant is that to you?
Yes, thank you, Avril. Absolutely. You see this SCO summit held in Tianjin is really having very big significance because it is the largest SCO gathering in more than 20 years. It's probably one of the highest level that we have 20 over some leaders there, and Indian Prime Minister Modi was there. And also, this SCO it's been well planned and organized. And they issued many statements. For example, they have a 10-year long-term strategy has been stipulated. As you said, they also going to establish a new SCO bank. But further than that, they are also build up quite a few platform plans. For example, platform on the green industry, on the energy, on also digital, and also there's a science and technology platform, education platform, or vocational platform. On top of that, China also pledged actual dollars and monies to this development, so that you have something to start with. You have something to catalyze with all those members. So this is really, you have an anchor to really drive that. Plus, you have all those heads of state gather here to really push forward a kind of a more, in the multipolar world, there's one strong polo here, right here, gathering as well. So they actually propose many new thinking as well, that they're going to maintain multilateralism, stick to UN principle, maintain WTO.
Right.
There's a lot on that. So I think this is really a very important gathering here in
Henry, talk to us about this show of unity between the Indian, Chinese, Russian presidents. What do you see beyond the symbolism as a way to counter U.S. dominance?
Well, I think there's a very strong, displeasure demonstrated on the what U.S. has been pushing for example, unilateralism, back off of the WHO, climate agreement and UNESCO, and threatening WTO and all those, unilateral approach. Certainly, China being the second largest economy, and India soon to be the third largest economy, they really want to show to the world, and including Russia, that they want to maintain the 80 years old global system, want to improve, enlarge, and enhance of this system. They don't want this to be disrupted. So I think there's a lot of messages sent on that. They want to actually keep the global trade and global business as strong as they can, and also SCO become a mediating probably platform. You see both Prime Minister Modi and Pakistan Prime Minister there at the same table. Armenia, Azerbaijan heads of state, China and India actually get together. So I think this shows that, of course, they want to promote in peace. So SCO could be an extra guarantor to maybe BRICS countries like China, India can help settle the Ukraine-Russian war.
How would that differ from all of the other multilateral organizations that we already have in place, like the China-led AIIB, for example? Yeah.
Well, AIIB is an international organization. You have a lot of, largely developed countries, like all the European countries are there, and many Australia, Canada, New Zealand are there. So there's a lot of a great mix of BRICS countries and the developed countries, like India was there as a vice president. India actually received the largest loan from AIIB. But that's purely financial, but there's also a new development bank that established in Shanghai that focuses on the BRICS country development. So this time they have a SCO bank developed. So you can see actually there's more financially, economically interchanges with this all the which is reflect reality. I mean, BRICS countries, SCO countries are already growing economically strong. BRICS country GDP is already larger than G7 now. So I think they reflect that more business.
Geopolitically speaking, though, how sustainable are such partnerships, given, of course, that China has issues with other countries territorial issues with Southeast Asian countries, not to mention, of course, the China-India relationship also marred and tense a little bit because of the Pakistan relationship as well.
Well, I think this is going to improve. Economic comes first, and then I see the key takeaway is that also they build up some kind of a cordial and friendly atmosphere at this summit, particularly with India. That both Moody and President Xi announced that we're not rivalries. Not that the U.S. and Europe take China as a rivalry. They are saying we're not rivalries. So all those countries are seeking friendly cooperation. So. Further then you can see, they could improve relations, and there's quite a few ASEAN countries, and Laos is added to the member or partner member of SCO as well. And this is really a good way to gather cooperative spirit, particularly this time. You see, SCO is gradually building into a big block of economic cooperation. So it's really interesting. You have AIB, you have RCEP, you have SCO, BRICS. So those are really great shift to more, in addition to security, more economic and business. For example, the trade among the SCO countries amounts to $2.3 billion a year. That's enormous. So I think that's really interesting to see this kind of proliferation or thriving of the economic boom or economic model that will be emerging against this, the globally is not functioning so well. So there's a lot of regional practice now.
Henry Hoya Wang, really good to have you with us, founder and president at the Center for China and Globalization.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.